Welcome back. We've been in conversation with the top team of JP Morgan, trying to decode a lot of the government action that's come through and the anticipated, of course, RBI action as well. Bharat, I want to go back to, again, the sector where the announcements are coming in, housing and real estate.
Yeah.
Does it help at all? Because we're getting a diverse range of views. Some people complaining that there's nothing in it for demand, for generating demand. So is it going to be adequate?
See, Surabhi, I think what we'll need to appreciate that is that India is a very heterogeneous real estate market, unlike a Singapore or a Hong Kong. So, it's very difficult to make, a pan-India, take a pan-India view or make a pan-India comparison. I think what you're already seeing is in select pockets, demand is beginning to pick up now. Affordability levels have caught up with, prices, and we're seeing actually demand do quite well in certain pockets. I guess the main areas of stress still remain Mumbai, particularly, I guess, the area where we are sitting, and pockets of NCR. And there, I guess it will take a little bit of time because, again, if you see most of the government action, it has been targeted at reviving demand at the grassroots level on a pan-India basis. It's not something, they're not really not trying to look at, boosting demand in a couple of metropolitan cities or bailing out half a dozen companies which may be under stress. So I guess one needs to make that differentiation.
So positive on the sector?
Positive on the sector from a valuation point of view, yes.
Okay. Sajid, you kind of set the ball rolling by cutting the GDP forecast to 6.4 when the Reserve Bank, it is still at 6.9, but now we are hearing 5.7 and 5.8. I think HSBC and someone else. But anyway, do you think there's a downward risk now?
I think there's a big downside risk to 6.4. I think we'll do well to get to 6% this year. I know the July IP surprised to the upside, but just look at the August data, whether it's exports, imports, non-food credit growth actually slowed month on month. And for me, the most revealing number is the core inflation number. Month on month, if you take gold out, it's zero. It's flat in August, which actually makes the likelihood of more rate cuts higher, but tells you that pricing power is very weak. So I think we just have to take a deep breath here and realize this is going to take some time to play out. For me, so much of this is about confidence, not just business confidence, but household confidence. What's less appreciated is household debt has gone up by 10 percentage points of GDP in the last 5 or 6 years. So if income growth is slowing, unemployment's rising, and debt levels have gone up, the question is, if you have a long enough shock, do households recalibrate future income expectations and cut back on consumption? Now, that's a risk we have to be mindful of, but let's not rush the matter. This could take a couple of quarters to come out. Hopefully, when we're on the other side, many of the things the government have done will ensure more sustainable growth. But I think if we can get to 6% this year, because that entails growing in the high sixes in the second half of the year. So 6 itself for a full year average presumes a meaningful cyclical recovery in the second half of the year.
Okay, presumes a recovery? I thought it just presumed the low base.
No, well, the low base gives you about 50 basis points, right? But to get to an average of 6 for the full year, if your first quarter is 5 and your second quarter is between 5 and 5.5, still means on a sequential momentum, there will be a meaningful pickup, at least in the Jan to March quarter.
So you need to have a sharp pickup in Q4.
Again, I think we should be less obsessed about what the quarterly numbers are, focus on the inputs. I think the government, to their credit, over the last few weeks have made a series of announcements. Each of these may be incremental, but if you put them together, I think if you add the cumulative impact of those announcements, some better transmission in the second half of the year, I think together should bode for some pickup. Also remember the global environment, oil apart, has picked up in the last 3-4 weeks. The risks of a US-China trade war today are less than they were a year or two ago, and that would bode well for business sentiment in the second half of the year. So some tailwind from exports, better transmission together should give us a little bit more hope in the second half.
Which brings me to my next question. This one's for you, ma'am. How will then a foreign investor be looking at India? You've got a country with about 6% growth at best. You have a risk-on if you have a risk-on environment internationally, and then you're looking at this market, will we continue to see this FII exodus, or do you expect a return this year?
Actually, I'm going to ask the same question, so let me put it in my words. If you have to make a sales switch to an FII, what will you tell him?
So, I believe that if you look at, let's take 6% as the real GDP, we can argue 6.4 or 6.2, and take 4% inflation, 10% nominal GDP. Tell me which other emerging market of the size that India is offers that. And it's not as though the foreign institutional investors are all going to be positioned, take a position on US, or they will, kind of look at a diversified portfolio. And I think India stacks up actually quite well. I feel we as a country are far and always continue to be far more pessimistic about our prospects than any foreign investor. Having said that, yes, in the last few months, we've seen a negative flow out of that. But on the other hand, none of you talk about it. Look at the positive flow in the domestic mutual fund industry. I remember Bharat telling me a month or so ago, ma'am, watch how long it'll hold on. Well, it's held on for all of the last few months, despite the significant volatility that we've seen in the equity markets.
In fact, it picked
so
up
I
very
disagree
nicely.
a lot with what some of my colleagues are telling me. I don't think our time is going to permit us to get into that debate.
Okay, I take your point, but the FI numbers are negative, and then FIs look at Delta. Look where you all began the earnings growth at, and now you're talking about a 10% nominal GDP, which is a 12% earnings growth. So I mean, it's the Delta, ma'am, and you know that that'll continue to be negative for us.
Saying what's going to happen from here onwards.
Yes, that is my point. So do you expect earnings to pick up in the second half? If yes, what will be on your radar? Which sectors or stocks?
No, Lata, I think there is a case for earnings to pick up into the second half because if you looked at the first quarter numbers, Nifty earnings grew at about 3%. So, I mean, it's very difficult to see it get worse than that. So, I guess, as we go into the second half, I mean, given the confluence of positives that we've spoken about, I mean, not all incremental, not, earth-shattering, I think we should see a pickup in earnings, and that's the reason, we are looking at, low double-digit earnings growth for the year. I think what will drive earnings, I think you'll still see the large banks drive earnings because I guess, for them, the major credit cycle issues are behind them. And what you're seeing is mid-corporate stress, which I don't think is going to impact them to the extent the large corporate stress impacted them. So I think they will still be the key drivers of earnings growth. Then you have, segments that will benefit from a pickup in government spending. And I think, most of them will, see a reasonable pickup. You've seen actually the order books of some companies in the capital goods space do very well over the last quarter. I mean, despite all the doom and gloom that we saw around, cement numbers have been holding out quite well, particularly in terms of price increases. I think, you'll have pockets of defensive names like, IT services, utilities, some of the resources names, etc. So overall, I think, we should expect earnings to do better as we go into the year.
Bharat, just
Let
a
me add a
question.
final positive question. I mean, the question is positive. I don't know what your answer is. This October, or rather the September uptick you're seeing in global data.
Yes.
What are the chances that there is a positive upside surprise simply because look at the QE from ECB?
Exactly.
So you think that that can bring risk on?
It can. 23 central banks have cut interest rates in the last 3 months. There is a global coordinated monetary easing, which is bound to have an impact on global activity. We now expect the Fed to cut rates 3 times this week and the next 2 meetings as well. Remember, the central bank has cut 110 basis points. Add another 20 or 30 basis points, so much liquidity. Lata, you and I know, with a 9 to 12 month lag, this inevitably impacts activity. So we just have to be patient and see the impact of the previous easing, both in India and around the world, play out in activity. Let's not draw straight lines.
Okay, so just be patient is the takeaway. Ma'am, last question to you. If you were to give a final word of advice to the finance minister, or maybe a feedback, if not advice, what would it be?
I think she's been extremely proactive after the lull that we saw post the budget announcement in terms of engaging with industry. And it's not just people going and meeting her in Delhi, but as you know, she did this major tour, as it were, of all the state capitals in terms of gathering feedback. I think it's absolutely critical for the government to continue this engagement. And there is a lot of things that we want in the next budget. I think it'll be very important to start gathering all that feedback. And this is a dynamic situation. So, you just can't take a particular view and kind of hang on to it, but constantly engaging with the market and the industry would be great.
Okay, at least as of now, the finance minister has won over Aramco because not only is the mid-cap index in the green, the number of advancing stocks are 5 in the green for 4 in the red. So the finance minister wins for the moment, or at least the bulls win for the moment. Let's see how the rest of the day pans out. Thank you very much for joining us on this special edition of Bazaar. Trading ideas lined up for you on Chartbusters.